Hello, welcome to State of the Market. John Griswold here with my sister and business partner, Katie. Excited to dive into what's going on in the real estate market.
Good afternoon, good morning, whatever time it is for you guys. Today we're going to talk about low inventory, which has been a major topic of discussion for a while now, but particularly of importance today because inventory is lower than we've ever seen it, which is a little counter to what I was expecting. So, back in March of 2020, when COVID hit, we of course saw low inventory persist through the remainder of 2020 because of course we had stay-at-home orders for a period of time and sellers were frankly scared to put their home on the market unless they really needed to sell. Inventory was even lower in 2021, primarily because we still had fear from sellers with regard to COVID, but also because most sellers become buyers. And the market was so crazy at the time that most sellers said, I'm too afraid to sell because I don't want to be a buyer. Fast forward to 2022 and we're still seeing record low inventory. It's actually at its worst levels today than it was the last 2 years. The biggest reason why is mortgage rates.
Exactly. When we had the acceleration of the housing market as we were coming out of COVID, a lot of that was driven by interest rates because they were at one point, they were as low as 2.5%. So everyone went and sold and bought a house, or they refinanced multiple times and locked in historically low interest rates that we may not see ever again, or it will be a long time. And so the inverse is also true. As interest rates have risen, as we are trying to combat inflation and slow down the housing market, it has worked. The housing market has slowed, demand has dropped, and there was thought that as demand dropped, inventory would rise because homes are selling slower, and so we would have a spike in inventory, and maybe even a spike in inventory enough where we would actually see a decline in real estate values, but that hasn't been the case. And a lot of that is because people may not love where they live, but man, they love their interest rate and they love their monthly payment, and they're not willing to sell and lock in a rate that could be twice or even more than twice what they're currently paying. 70% of people have an interest rate below 4%. Over a third of folks have an interest rate below 3%. That's a very compelling reason to find a way to stay in your home.
That's a great point, John. And not only is it interest rates, but it's property taxes too. Home values have risen so much over the last couple of years that, sellers are having to, when they become a buyer, look at, a higher interest rate, also higher property taxes. So we're seeing this new trend, basically it's called hunkering down, where you have homeowners that are just saying, hey, as much as I need that third bedroom, that extra space, whatever it may be, I'm just gonna hunker down until, the financial situation makes more sense based on these factors.
The good news for the overall market is this is causing home values to stabilize, and we think that this is going to be the trend for the rest of the year. Inventory is going to continue to drop, but we think demand is going to continue to drop as well. And then we'll see what comes in 2023 as we enter into probably another strong spring market. So that's all we have for today. And if you have any questions, reach out to us. We'll talk to you soon.
Bye, everybody.
Bye.